The Consumer Bankers Association is pleased to welcome you to today's webinar, After the Curve, Automation and Digital Tools Are Here to Stay, presented by FirstClose. My name is Jennifer, and it's my pleasure to facilitate. Thank you for joining. Please note we are recording, and we did mute all participant lines. If you have any trouble, please email cba@compartners.com or send a message in the chat box. If you're listening over the phone, please press *0 and an operator will help you. The presentation will last up to 60 minutes and does include a question and answer opportunity at the end. You may submit a question at any time by typing it into the chat box in the lower left corner of your screen, and do be sure to click the send button. I'd also like to direct your attention to the links box on the top left of your screen, where there are resources for you to view, save, or print. Simply click on the link of your choice and a separate window will open. This will not interfere with your viewing of the program. As a reminder, the views expressed in this webinar are those of the presenters and do not represent the views of CBA or its members. It's now my pleasure to introduce our speakers. Joe Darling is the Senior Vice President, Strategy and Sales with FirstClose. Joe's a 25-year veteran of the mortgage industry who specializes in executive management, fintech, and strategic marketing. He's known for being a strong advocate of technology and an expert in leveraging the latest tech stack and automation to ensure the success of his endeavors. Mr. Darling has developed his skills in every aspect of modern strategic business management, including sales, software, and project management, business process analysis, system design, and system implementation. In regard to the mortgage lending space, he has strong in-depth knowledge of secondary marketing, loan production, and quality control procedures, including automated origination and compliance, e-signatures, and e-vendor management, preemptive quality control, and post-closing secondary fulfillment. He also has experience in appraisal management portals, digital vaulting, and private label cloud-based business models. He's uniquely qualified to lead financial services companies in efforts to radically revamp their business strategies. Sarah Nakai is the Director of Marketing and Enterprise Sales with FirstClose. Sarah has more than 15 years of experience in fintech, serving the financial services sector in realtor and agency marketing for banks and credit unions, and extensive experience in the mortgage industry working with banks, credit unions, and mortgage companies to deliver award-winning technology solutions and services. She has been a keynote presenter at leading industry events and conferences discussing fintech and its impact on lenders' business. Recently named one of the 2019's most powerful women in fintech and marketing trailblazer, Sarah has deep industry knowledge in the financial digital space. She's responsible for marketing execution, driving sales strategy, and enterprise sales relationships. Wow. And we also have Landon Smith, Executive Vice President, Client Strategy and Business Development with the Closing Exchange, an accomplished business executive with more than 25 years experience in the lender services and title industry, all aspects of the life cycle of the loan, origination, servicing, default, and lender relations. He's a senior level executive with management experience, including corporate board exposure, and he has specific executive and strategic leadership experience creating B2B operations, P&L, and strategic business development. He possesses a strong skill set in effectively building and managing high-performing sales teams, directing product sales growth strategy, revenue management, executive client relations, and developing new lines of business to operational maturity and profitability. Welcome to all of our speakers, and Sarah, I'll turn it over to you to begin.
Thank you, Jennifer. Hello, and welcome to our CBA webinar, After the Curve, Automation and Digital Tools Are Here to Stay. Thank you so much for everyone who has joined us today. We're really excited to share some of our insights of the current lending landscape, as well as arm you with innovative tools and strategies for moving forward. As Jennifer mentioned, today here's our presenter panel. From FirstClose, we have myself and Joe Darling. We're also really excited to have Landon Smith from the Closing Exchange join our panel to provide some amazing insights on what's happening in the closing world during these rocky times. Just as a brief overview, here's what we're going to cover today. Digital tools are changing the origination process, and automation is here to stay. Lenders are quickly making the switch from old manual processes after recently being hit with county closures and social distancing measures and suddenly halted business workflow. Having access to the essential digital tools is crucial for continuing to support borrowers and gaining an advantage post-COVID-19. We hope everyone walks away from this webinar with additional tools and strategies on how to move business forward as we find ourselves in a contactless, social distanced digital environment. With that being said, the crisis has inspired creative thinking to its highest order, and our U.S. mortgage industry has been quite innovative, not just the active exploring of all the possibilities of video-based closings, remote online notarization, regulators and investors easing restrictions, but also enabling remote work by a mammoth and diverse workforce. The demand for digital automation increased significantly during COVID-19, and we're here to help lenders transition by leveraging automation tools. Now that we've discussed the goals, what are some of the challenges that lenders have faced today? As we become more and more accustomed with our smart devices and millennials accumulating more and more home equity than ever before, consumers are expecting a more streamlined digital experience with instant gratification. A term that's been kind of floating around that would really apply here would be the Amazon effect. They want to know how much equity they have, how much they can borrow, what's it going to cost them, and how quickly the money will be in their account. Consumers are also more price conscious than ever, so they're not only looking for speed, but they're shopping for closing costs and loan rates. There's an anecdote floating out there as well that says consumers would rather go to a dentist than apply for a mortgage loan. That tells us that lenders need to modernize their loan process to a world-class borrower experience if they want to compete today. Being able to serve a borrower in the way that they want to be interacted with is going to be key for moving forward and staying competitive. The COVID-19 effect and after the curve. Needless to say, everybody has been affected by this in one form or another. And what we do know is that the pandemic has changed the way that lenders are doing business, literally overnight. How we react to this as a lending community has already impacted millions of Americans, from issuing mortgage forbearances to processing PPP loans. And a lot of us have had to move our whole workforce to a fully remote employees with the lack of the face-to-face interaction also brings along its own set of challenges. Our new normal is back-to-back Zoom meetings or go-to meetings, an increased number of email communications, as well as trying to make sure our organizations stay up to date and all on the same page. Additionally, banking branches have been affected, from full branch closures with ATM access only and some only letting borrowers in by appointment. The ability to close loans quickly and efficiently has taken a backseat to ensuring the health and safety of our consumers. They say that necessity is the mother of invention, and with our federal, state, and local government leaders calling for social distancing and looking to invoke stricter policies such as shelter in place, us as lenders, we have to find new ways to keep lending while keeping people safe from spreading the virus. We've all scrambled to implement solutions to create this contactless banking environment and also keep up with the demands of consumers while still trying to provide the highest level of a customer experience, which historically, there is a high level of face-to-face interaction with. FirstClose, we don't take the situation lightly, and we're doing our best and we're doing our part to help lenders navigate through this rapidly changing environment. Now, we are at the forefront of delivering touchless products by allowing homeowners to verify key property data in their home, allowing them to take their own pictures on their own smart devices, eliminating that need for any third-party agents to either enter the home. Not only does this type of technology keep the homeowner and the agent or the appraiser safe, but it's going to speed up turn times by eliminating scheduling property visits, and so for both parties that is really a true win-win. And this technology is in place and ready to be implemented, and we're also leveraging innovative ways to deliver e-signing, e-notary, and closings, which we're also going to cover today. FirstClose, we're constantly monitoring key decision makers and thought leaders along with Fannie and Freddie and the regulatory agencies, and as things continue to change, lenders are really going to need a partner who can rapidly implement solutions in order to comply with the changes that come down in short order. FirstClose, we're an excellent partner, and we realize that we're all in this together as one big lending community, and we want to be proactive in leveraging technology and by providing innovative solutions to help our customers, during these challenging times. J.D. Power wrapped up their latest HELOC study at the end of last year, and looking at it, it's more accurate now than it ever was before. Leveraging current loan customers is always going to be a great first step, but it's not going to move the needle in terms of exponentially growing origination. The home equity marketplace is being flooded with low rates and innovative fintechs, and as the economy starts to shift, more borrowers may be looking to pull available cash just to have on hand. A quote here is saying that consumers are being wooed by increasingly sophisticated competitors. Traditional banks need to meet and exceed evolving customer expectations. Non-traditional lenders need to overcome negative customer perceptions on being profit-driven. We've been hearing this a lot lately with talking to our clients, and they're starting to feel the effect of the fintech competitors, and they are actively looking for ways to retain business as well as increase their market share. The current strategy of offering favorable loan programs isn't going to be enough to capture the new originations. They're going to need to focus on delivering an exceptional digital borrower experience. Allowing a consumer to apply for a loan anywhere at any time is going to be key to moving forward in this lending environment and achieving your strategic goals. If we didn't think it was already difficult to compete with the fintech competitors, it's even more of a challenge now that we have social distance. We now have to take a process that involves a certain amount of customer service and face-to-face interaction to a contactless workflow. In some recent stats, even our consumers can agree that the digital environment is here to stay, and they're going to be expecting more of their banking needs to be fulfilled digitally. We have already been able to demonstrate through this process to our consumers that we do have this ability to conduct lending business digitally, and that's going to be the new normal moving forward. Why would a borrower want to spend time filling out paperwork in person when they can do it from the comfort or the safety of their own home? I'm going to pass it over to Joe to dive a little deeper into what this new digital contactless environment means for lenders.
Awesome. Thank you, Sarah. Good opening. I really appreciate it. Thank you, Jennifer, for the nice introductions. That was really nice of you. And if you want to click over to the next slide here, I think the pace of digitization, is it outpacing lenders, you think? Is it now to the point now where we have so much competition that that the pace is accelerating how fast we can implement these strategies? Here's a great one we took. This is probably one of the last conferences we got to go to before before COVID. And Sarah and I thought that this was an appropriate slide because we're seeing the pace now by 2022 that 81% of the lending volume is going to be digital. And this was before COVID. So now, take it after COVID, obviously we can see that, building a digital strategy is more important than ever. And the Boston Consulting Group did a great job. I thought this was a great piece, and I shared it with Sarah and Landon, and we said we definitely have to put this in because there's really are 4 key pillars in this digital journey. And that's reinventing the customer journey. We understand that. I think we all understand it. Sarah brought it up very well in the very beginning about why lenders are doing that. And you have your own strategies that you're working on, but you're always trying to perfect that consumer journey. And one of the things they talked about at this conference, well, what's your own journey? Go use your current tools in your current process and go through it yourself, right? And look at ways that you can re-innovate that customer journey. And by doing so, you need to leverage data because there's a ton of data that's available either inside of our core banking platforms or also that comes from data that you can leverage at the point of sale. And this could help you define the operating model And that's really kind of what we're looking for, as lenders to lower that cost while we're trying to increase that consumer experience. And I think the pace of digitization today is allowing us to do that. And this builds really a digital-driven organization. And that's not to be taken lightly, but those are the 4 pillars that they're basically to and saying that you need to have. And so building this digital solution helps lenders move forward. And if you're going to deliver a world-class experience, right, they have to have certain components. And, you know, I think one of the things that we did as a group, putting together this presentation for y'all, is that we really want to take a look at all the different touch points all the way through. And for example, leveraging data here at FirstClose, what we do is we do instant evaluation analysis of equity analysis. We know the biggest fallout that's happening with the home equity lending side is that, do you have enough equity? And then the second question is, do you have enough score? And those 2 big questions basically are about 46% of the reason for fault. Although you'll always have to accept an application if the customer wants to present an application to you, could you leverage technology to do instant evaluation at the point of sale, giving the consumer that experience to drive this type of origination strategy? And then if I already pulled and all I asked my consumer to do was to enter the subject property address, and instantly I had all these data. Did you know that 3,000 data points come out of a subject property database? You know, leveraging that equity, leveraging that underwriting lien analysis to tell and help our consumers through that instant analysis is awesome. By using those soft pull credit reports at the point of sale too as well, it really eliminates those 2 things. And now creating that world-class experience, it has to involve income analysis, right? Because the next biggest key thing that we're looking at is when we have the soft pull credit, we have the liabilities, and we need to run that debt-to-income ratio analysis. And then really there's no other world-class experience than giving the consumer what they wanted right up front with an instant decision with actual conditions. And so instant delivery of loan commitment and disclosures are very key, and they have to be done in today's environment. And by all means, you have to make it mobilized, right? So everything has to be able to be done on the mobile device, and really it should be done in like, you know, less than 3.5, 4 minutes to complete this whole entire process. And what does this really do? What is it that the digital solutions really provide that help this world-class experience? Well, it does. It changes how the app is being put together from the very beginning. You allow your consumer to move the file forward. I think what we're going to talk about here next will go into exactly why that's a huge benefit to help you lower your costs and increase that experience, and the opportunity to change your workflow, which could obviously change the FTE required for a number of touches that you have on your properties and on your applications. So obviously the trends are all going in this direction. This is one of the recent ones that we had that just came out, and we're going to give you a context afterwards because we put all the sublinks on all this data from. But obviously 92% of recent mortgage borrowers did an online search before they even speak with their lender. Consumers they don't want to talk to everybody right now, right up front. They want to do their research first. We know they're shopping, right? 74% of all borrowers use online portals to work with their lender. Yes, I know what I want. I probably know that I'm already qualified. I'm an experienced borrower if I'm getting a home equity line of credit. There's reasons that I'm doing that, and therefore make it easier for me during this entire journey. The trends are all moving in this direction. I think we all agree, it's the CBA, that this is actually happening. But reforming how this all works together is really some of the key components that could really change your operation. And now we're kind of being pressed into it with the latest environment. So what we do is we bring all of this together: automation, technology, and service. We realize in the home equity business, this is still a service business. But automation and technology are really paying very strong changes to the whole entire process. It not only helps streamline the complete lending process from the very beginning, but it also streamlines all your vendor management if you have a tool that can handle. And sometimes you need to have a tool that can go off and find that best next provider for those type of things that you need to fulfill that loan package. And typically it's not all done in 1 minute and 40 seconds like customers who use FirstClose do. But you know, we need to leverage this technology. We also need to reimagine how service is being done. And we think that we've done that. And I'm not going to turn this into a complete, you know, pitch for FirstClose, but the way it's a one platform is a game changer for our clients. And so we're trying to drive applications and help our clients at the point of sale, whether it be a little digital onboarding piece or ways that they can drive additional traffic. we're trying to help our clients do that today. And so we're trying to drive the engagement and the conversions. And we're not asking somebody to come and go onto the portal and enter their username and password and create an account before they can easily do anything. This is a way that they can come in and actually run their own equity at the point of sale and use the Equity IQ as a way to help consumers educate themselves about the things they can be doing. And nextly, after that, you want to be able to search for the products, whether it's a fixed rate product or a home equity line of credit product. And you want the ability to do that even before I give you my name and contact information, or even before I want to apply. And so these things are changing the digital point of sale all the way through. And so, like, for us at FirstClose, we can do all of that from a street address. And as I told you, we have 3,000 fields of data that we backfill into the whole 1003, into the whole application that's being processed. And seamlessly, we deliver this into the LOSs, not only with data and documents, but all the forms that came with it for all the orders that you've done. And so there's really, borrowers can get instant home equity right up front. There's really 4 screens that really handles this whole piece. And you can get it done very quickly, and it invites the consumer to move forward, and it leverages a different type of process by giving them an upfront commitment at the point of sale. And AUSs today, the way that we have worked with them is awesome, whether you're doing that through your LOS today, or you want to use FirstClose and develop your own automated AUS, you can do that too as well. So we see those as really the important part of the onboarding experience. We go back to those 4 pillars. That's what it's really all about, creating that good customer experience, but let the consumer drive the transaction. Let the consumer be educated too as well, because this could really change the game, the way that we handle all of the products and services based upon your matrices and your risk guidelines. So it's way more than bundled services, right? Automated ordering customizes based upon your underwriting guidelines, and it pre-configures these orders. In other words, we're trying to leapfrog this thing into first touch underwriting immediately. There's really no reason why we couldn't be able to close home lines of credit probably within just a few days. And so that's where we're helping our clients. We've released automated ordering based upon our clients' feedback. So our partners give us this feedback that turns into our roadmap. And the way that we leverage this today has been really impressive, because this is not just about, following your matrix and having that basic understanding. This is about a different way of robotic process automation that manages inside of your risk management guidelines. So here's an example of a configuration that's in our platform today, and you can see how quickly that order is being fulfilled. Typically, it's about 1 minute and 30 seconds for all of these things to be fulfilled based upon your automated matrix. And so what we're trying to do is we're trying to help reduce touches, save cost, leverage technology and automation to create a way for you to streamline your operations to fulfill the needs that your customer wants at the point of sale. So we bring this all together. So what would happen if you added your matrix in here? Could you see a few touches that you could eliminate now? Instead of going to the branch salesperson or everything else, it could go right into first touch underwriting and be automatically basically cleared. You could have an automated approval at the point of sale, helping your client upload these documents and the additional requirements that you need. And, does this type of automation change your strategy? Who should consider this type of a strategy? If you want, Sarah and I would love to give you a quick little strategy overview about how this could be done. Because if you think about it, the way that we are sharing it to you here, this is really automating your whole matrix. Here's an example of a customized matrix. And you're going to get a copy of this so you can take this. And if you'd like us to build your own strategy for you and build your own matrix, we're more than willing to help you. Because we see in the way that we read your risk-based guidelines based upon the products and services that you want in the configurations that we build for you, makes automating ordering to your matrix super easy. And we help these large volume clients do this. We also help the small credit unions and the small banks do this as well. So this is very important to the part of the process here. And you can see that if there's a lower risk guidelines and lower loan amounts with a higher score, how maybe just an AVM is going to work. But if you're going to go over the 250,000, we want a desktop with a property condition report. Or if it's greater than 80%, let's upgrade that to a 2055 or a 1004 if that's what you want to do. Whatever your risk guidelines are, whatever your tolerances are, and we all know those are going to change. So you need to have the ability to change your matrix on the fly too as well. And if you want to leverage us for your automated underwriting engine, you could do the same thing there. So this gives you kind of a quick little overview about those 4 pillars that we talked about about how to leverage technology and then also to streamline the process to cut down the cost to deliver really the ultimate customer experience. And I think that was done with my slides. I'm back over to you, Sarah, or Landon.
Yep, Sarah. So yeah, in addition, to the digital strategies and how to automate and streamline that world-class borrower experience, we're now faced with the social distancing and county closures. So FirstClose, we've been able to deliver these innovative products to our customers to help them continue to close loans. We have our no-contact products that are addressing county closures, our proprietary instant property report. That is delivered back to you within 30 seconds, and we'll have the current mortgages, judgment liens, tax, vested owner, and a PDF copy of the deed attached to that. We also even have our EquiGuard affidavit where the borrower can just attest to the fact that there are no other liens on the subject property, and both of those can be wrapped with an E&O wrapper. We also have for the valuation product, the VeriSite product, that is really putting the loan process in the borrower's hands by letting them upload their own photos, of the property. And, if I'm a borrower and I'm wanting to get my money fast and I get that to my phone, I'm going to go ahead and take those pictures as soon as I can and get them uploaded because I want my money. I don't want to wait for someone to come out to my house and, do a drive-by and take exterior photos and, upload them back in to the system. I want it now, and so it's going to allow for faster loan processing and decision-making on your end. Also the proprietary desktop evaluation, as well as, a wide variety of exterior restricted appraisal reports that can be done without any contact with the borrower as well. We also have on the closing side, our curbside closing product, and I'm going to pass it off to Landon, who's our closing guru, who's going to kind of walk us through, what we're seeing in terms of the closing environment, how to continue moving forward and what we see in the future.
Thanks, Sarah, and thank you to FirstClose. We appreciate the opportunity to talk to everybody today, and thank you to Jennifer and the CBA overall and Jake. But while we've heard a lot of these different solutions and strategies that are digitally related and are a little bit more mature, I think as we start to talk more and more about the closing, how do we get these things closed, and to speak specifically about the curbside closing, which is something that we started doing that you're seeing more and more frequently now, which was as a result of the COVID environment. We tried to, how could we accomplish the emerging CDC guidelines? We put this out in late March, right around the time everything started to get a little crazy, I guess, for lack of a better way to put it. We determined as the CDC was publishing its guidelines, we were working with the NNA saying, wouldn't it be nice, and how would we do this? So in essence, what we did was we took our wet sign model, which is the traditional notary signing model that's out there. We imposed all of these CDC guidelines. So mostly what you're finding now with the wet sign is you're going to have a opportunity for the borrower or the buyer to, or the owner for the HELOC to meet the notary signing agent in a place that is secure, where they will have gloves, masks, they will meet the CDC guidelines, whether it's at the home, whether it's through the garage. My family and I just did a refinance transaction 3 weeks ago, and we did it through the back porch of the house where the notary signing agent came in, had called me an hour before, had gloves, mask, fresh pens. We passed everything back and forth through a door, and there was a glass window. We provided our IDs. We provided copies of the IDs. Everything was discussed up front. So when you talk about offering something like that, that has really helped the borrowers tremendously. So let's talk a little bit, if we're over to the realities of the marketplace. When I was thinking about this and working with Joe and Sarah about, what's going to be sustainable as we move through. As we know, we were and still are in an origination crush, if you will, for lack of a better way to put it. And then along comes this pandemic, which we've heard the expression perfect storm probably more times than we'd like to hear. So we were already faced with tremendous pressure to originate, go through all these processes, and ultimately close. Closing has always been one of the most challenging parts of the process. I'm sure everyone can talk about the different challenging parts, but we know the rubber meets the road when the consumer's involved, and how do we get this thing done? So when I was thinking about this with Joe and Sarah, we thought, well, there are realities to the marketplace, or realities of the marketplace, as the slide says. There are digital tools that are here to stay. One of the things that we've thought a lot about is there are things that are going to remain the same, and then there are things that are going to change. But one thing we're confident of is most of the technologies that are coming into the market are supplementing rather than completely replacing how we do things today. So if you talk about the first bullet here, we've got new consumer expectations. Consumers are faced with what we just talked about, the COVID, how do we keep it safe? We really don't know what this is going to look like when we come out of it. What will that be? There's a lot going on in our country now that we know about. Tremendous pressure on people, and pressure on us as providers in this environment. So I think we're pretty clear that the consumers are going to have new expectations, different expectations, because they're faced with, well, how can I do this with as little contact as possible? So you've got to be able to offer a convenient and safe closing in this environment. You've got to be flexible. You've got to be able to, as we know, technology isn't going to provide every aspect of the closing process due to underwriter requirements, title insurance underwriter requirements, due to state laws, due to a multitude of different things that may not allow for a particular type of electronic style of closing to take place. So there's going to be, in our estimation, for the foreseeable future, a blend of the traditional wet with the E, which we're typically calling in this environment, and you've probably heard the phrase hybrid. So how do you do that? How do you offer that? You've got to have vendors and suppliers that know how to offer not just a technology platform. There's tons of those. There's bright, shiny objects, and for those of us, and there are many of on this phone who have been in this business a long time, we know many of these methods are not tried, and they're not true, and they're far from traditional. And we also know there's a lot of bright, shiny objects and a lot of technology, but there has to be a lot of understanding about how it works, whether it's legal, whether the title insurance underwriters approve it, whether investors will support it, will it meet your InfoSec and compliance requirements. So there's a lot to take into account. And you've got to be able to make sure your supplier can recognize it's not just technology. I've got to have a service component. I've got to have people that know to help support that. So I can seamlessly shift and be able to adopt these different platforms, or rather these different solutions and fulfillment models. And I'll talk a little bit more about that. Overcoming adoption challenges is a little bit of what I'm leading into here. This is huge. It can't be overstated. I'm sure what I'm telling most of you today is not something that you don't already know. I'm not going to suggest to you that I'm an expert. One thing I will tell you is that I think most of us are experiencing what we thought we knew is changing every day. And as we talk about the education, the training, the awareness, you've got to be able to work with people that understand the solutions that can be applied in your situation. This is not a big box, one size fits all. It's very important that who you choose understands that and can help you with those types of adoption challenges. Is it the lender? Is it you? Is it education? You need to better understand, why do you want to do what you want to do? Can you do it? Who benefits from it? Are there hardware, software requirements? And then, of course, we know what the consumer expects, or we think we do, which is a whole other piece of it, which is equally as if not more important. But those two things don't always meet together. That's why it's really, really important. Consumers have to be educated. Consumers have to be trained. They're more informed now than they've ever been. I will say I wouldn't necessarily say that they all understand, but they're now more informed, so they're going to ask questions. As we've already heard, they're going to have certain expectations, and that's where all of this comes in. So that's really, really important. The integrated solutions is really just a matter of what I've been blending in all of this. Does your provider have the ability to scale and fulfill in a comprehensive manner? There are so many technologies out there. Can you find someone? Are there providers out there? We like to think at FirstClose and the Closing Exchange, we are two of those providers that have integrated together to offer a very, very good experience for both the lender and the consumer. But understanding that this is a very interconnected world, and all of these platforms and solutions, again, there isn't a one-size-fits-all. You have to have the ability to fulfill in a very comprehensive manner and be able to, as I mentioned before, seamlessly shift between these different solutions because, and I will say it again and again, as we all know, being in this business a long time, there is not a one-size-fits-all, and we're learning that now more than ever. More questions and more unusual circumstances coming up than ever before. How can you do this? Can you do this in a particular state? So making sure that your partners have the various integrations that are necessary. And I don't mean necessarily just with your LOS, but you know you're hearing conversation, and some of you may be doing this, about e-notes and e-vaults and e-sign and digital closing and hybrid, and it's very, very confusing. Do you have the right partners? Do they have the right connectivity? Are you going to have to build multiple integrations that are going to cost you far more than your budget has allocated for? So it's really important that you get educated and pick the right providers that have these type of integrated solutions. Excuse me. So let's talk about a few of those. And what I don't really want to do today, and you're going to have this material as a takeaway, which is really important, is, you know, I don't want to attempt to boil the ocean because there's a lot of solutions out there right now, but I think, or I should say options in different technology platforms and emerging solutions that aren't mature. What I want to try to do today, in this particular slide, you'll see e-closing solutions for your consumers, and not all e-closings are the same. So if you look at the left box here, a hybrid e-closing. A hybrid e-closing is really what we're starting to see more and more. What is emerging in our belief as a very sustainable model for the foreseeable future. And the reason I say that is all of these other solutions aren't available or authorized or legal by statute or by investor or by your particular regulators or by your particular requirements available in every state in which you do business. So when you are considering what you want to do, it's back to those questions I posed before. Why do you want to do it? Can you do it, and who benefits? You know, you've got, as I mentioned before, you have title insurance underwriters who have to approve these transactions. You have the state level authorizations. You have your investors to be concerned with. Then you have your info security and compliance. So hybrid e-closing is available everywhere. That's where the borrowers and notaries will meet up in person. Some documents will be signed, as many as possible will be signed through an e-sign platform, and then you'll have a very skinny wet package. And right now we're fulfilling that in our hybrid, is our hybrid plus curbside. So we'll have a very skinny wet package that the borrowers will sign in a very safe type, minimal, low contact closing. The rest are done e-sign. IPIN is where the borrowers and the notary will meet face-to-face. All documents are signed digitally, electronically on a tablet, and then the notary has their e-notarization. That allows for everything to be done digitally. The borrower and the notary will still meet in person. The advantage to that is it does allow a lender to move towards an e-note or an e-vault, which is a completely separate conversation. Then you see the remote online notarization. That's something probably you're hearing more and more about. That's a very sustainable business model, and we're finding that more and more states are adopting it. I think there are probably 20 some odd states, I'm not going to say the exact number, I think 23 have either the RON statute in place or some combination of an executive authorization that came out of the COVID environment. That's still a very immature business model, I should say, a fulfillment model, maybe the better way to phrase that. Still very immature. There's a lot of good providers out there, but what you're faced with right now are resource constraints, capacity constraints. Just because it's being done digitally, you still have to have a notary. They have to have an e-notarization, which is authorization to do it electronically, their seal. Again, you go back to, is it legal in your state? Then you talk about the emergency orders and that authorization for that. That's a whole other subject. We've been involved in some of those. Those are very, very fluid, and those are very case-specific, very circumstantial, but the RON model itself is very sustainable. I think what we'll find is what I mentioned in the beginning, is you're going to find many closings going to be done in a hybrid format, and then some will be done in RON. Those are the three that we see as kind of what's coming in the future, the now and the sustainable, when you talk about what's going to be sustainable moving through. So if you move to the next slide, I came across this recently. Alta published this over the last week, and when the team and I were putting this presentation together, I thought, wow, now this is really a cool, so I'm a bit of a geek here, but for everybody on the phone, you'll have this as a takeaway, so you'll be able to see that this kind of lays out the notarization types, and again, I'm not going to dig into all the details of every one of them because that would take too long, but it gives you, it's a very nice visual graphic. You got the notarization types, you got the definitions, you got the authorizations, which is the state statutes or the executive orders, you got the doc types, multi-factor authentication, which is the security, the info security, the infosec, really, really important. How is it recorded? How is it retained? E-note capabilities, is it in-person or remote? So that's a very valuable slide. I'm not going to dig into that, but I thought that would be valuable to have. So there's a question here that I want to take a look at. And Joe, do you want me to see? So how is hybrid e-closing changing the time it takes when the curbside notary shows up at the meeting, home or office, and how long is that signing taking? So I will tell you right now, what you can assume is what we're experiencing is you're going from maybe a 45-minute to an hour closing to a session where you as the lender knows many disclosure and many upfront documents are already being e-signed by your borrower. So if that experience is very, very much customary to them or becoming far more customary, I think for most of us on the phone and our consumers, we would agree, they will then sign the documents they can e-sign up front in an environment where they can be educated on what those are, and that talks a little bit more about the fulfillment model that FirstClose and the Closing Exchange has, which certainly we're happy to talk about outside of this conversation. But you're moving from about a 45-minute to an hour closing to 30 minutes or less. You're talking maybe even 15, 20 minutes. That's really what we're experiencing.
Right. Yeah, that's good. I mean, if you think about it, the in-session time of the curbside now is dramatically dropped, right? And I think it was always kind of important too as well. I mean, when we think about this, Landon, the hybrid closing is really ideal because I get a chance as a consumer to actually read those documents. And all the closings that I've done and experienced myself personally, I'm in the business, so I kind of know it already. But I mean, we don't spend time reading all those documents ahead of time, right? We just sign as fast as we possibly can. So this hybrid kind of helps with the e-closings this way because the consumer is really more educated and can read really more of these things. And I just love the way that your platform does it. And you can ask questions and, even before you show up for the final signing or the commencement, right? So
that's right. That's right. You have the session where you can ask questions. You'll understand what you're signing. It doesn't, I'm trying to think of the best way to phrase it. What it allows you to do is it's not all built up to this one ceremony only where there's so much pressure. And I know we've all experienced from the consumer side and from the fulfillment side and the lender side, there's so much pressure to perform at this very single ceremony. And you've got, you're going to have people who are going to be compromised in different situations and circumstances, and we all know that, don't even need to get into that, but that's what the challenge is. And that, of course, that remains to be. So how do you find different ways to do this so you can meet their needs? And the hybrid is really the one where we're seeing, because, again, it's available everywhere. There are no limitations to it. E-sign can be done. It really then boils down to the lender's requirements and guidelines, but everything can be, certain things can be e-signed, and then the remainder of things can be wet signed. So
great chart. Really great chart, Landon. I mean, this is
I really like the chart, and I think
this is the price of admission right here, folks. This is the chart, if you ask me.
Yeah, it caught my attention. I said, you know what? We've been trying to figure out the best way to lay this kind of stuff out. NNA is a great resource. Alt is a great resource. CBA, of course, is a great resource. But as you start to drill down into what it is you're trying to find, you Google it, as we know how that goes, and then you're in a sea of confusion. So obviously, we certainly want you to think about FirstClose and the Closing Exchange, but we want you to, all this information is power, but it can also be confusion, overload. So this, I thought, was a really cool chart that really kind of simplified it, kind of give you a breakdown of what's what, and then put you on a path to start saying, okay, again, back to my questions, why do you want to do what you want to do? Can you do it? Who benefits from it?
Right.
So, you need a series of questions because you've got stakeholders as the lender, you've got consumers, you've got budgets, a lot. Can your vendors do it? So, again, from a vendor management and an oversight perspective and a procurement, a lot to be taken into consideration. So,
yeah,
but I'm going to look at our timing here. I think we're going to turn it back over to Sarah.
Yeah. Take it away, Sarah.
It's actually going to go back to Joe, and he's going to let us know the strategies and tools to keep the origination process moving forward.
Okay, it's back to me. Okay, thank you very much. Okay, so streamline the lending experience, and I think that's what we kind of talked about. We kind of opened this up in the very beginning, but you know, one thing that we do here at FirstClose, which I think is really important, is that it all starts with this, you know, digital lending platform and automated underwriting at the point of sale. That can lead into automated ordering. And automated ordering can really reduce touches or streamline your costs and make sure that when we read these key attributes, risk attributes of FICO, LTV, score combinations with you know, number of size of the mortgage loans that are outstanding against the subject property, all of those things together, those risk management requirements are all read automatically and automatically fulfilled, and to lower your touches, to streamline your operations, and to make your organization more profitable on that front. And then what also is really important with automated ordering is that what we've done is we have this thing called Smart Select, and Smart Select allows us to create instant title searches using electronic data. And a lot of our clients are participating in that and saving tons of time and money and leveraging all those tools. But if the data is unavailable in that particular area, then that usually sends them off into a manual order, manual touch process, and everything else. With Smart Select, it doesn't work that way. We find the best provider and the best turn time, the best price for those type of coverages that you're going to need in your lending footprint. And what it will do is it'll select the smart next provider in line to fulfill that order. And so our technology does that through the Smart Select piece. And so again, that automation is basically hands off. And it's all being monitored by your dedicated account management group. And all that happens in one full report, which everybody has come to know as the FirstClose report. And that's our proprietary report that delivers the valuation, the credit, the income, the flood, the title services, the instant title search, and all the loan fulfillment requirements, including flood, all into one easy to read report that can easily be found too as well. And then, so what it really does for automation, where we're focused on, is helping our clients drive this whole analysis at the point of sale, even all the way through automated approval. So we're providing this frictional experience so that our can help drive the process to completion. I mean, if you think about it, I mean, our clients are heavily motivated when they're ready to apply, right? They're the ones driving the process, not waiting for somebody in your organization to drive the process. And so, you know, proper workflows allows for automation. Leveraging data allows for automation, and just calling the microservices as you need them. And that's really where I think automation can really deliver a revamped strategy. I think really what's important too as well is that we understand that service is a mandatory issue for our clients. And we have dedicated account managers. This is Martha, and she's one of our account managers. We only use real people in our decks that actually are real employees and people that you'll be working with. And so the dedicated account management team is really there. They help you, handle your live ordering, make sure that they're monitoring those. They are running you some BI reports to tell you how your vendors are doing. They could swap out non-performing vendors and put the next available one in line. If you let them do that, they'll do that for you. They'll consult with you too as well, and they'll be able to produce the reports to show you that, hey, this one vendor that you seem to like the most is actually the worst performing vendor. You should consider another choice when you're fulfilling in this state or this market or this county in that particular cases. And those are very important conversations for our clients to have with our account management team and our customer care team, especially on the East Coast, and that's really important. And they can help you track your vendor management performance, and so leveraging those BI tools and everything else. So really, we see this as our leading piece as far as that piece is concerned. Sarah, did you want to take this over here, this slide over? You want me to keep on going?
Yeah.
Go ahead.
All right. So our newly redesigned FirstClose ONE platform was created for optimum efficiency, allowing our users and customers to easily place orders. They can review all their orders and products in real time from our one-screen navigation. We also have real-time production reports where users can monitor all their vendor performance and turn time. Built-in workflow management tools are also available, for organizations who have more of an assembly line approach to loan fulfillment. So it'll allow you to assign work into a work queue for different job functions such as appraisal review, pre-underwriting, pending order outs, or completed order outs, and everything is completely customizable to your organization's workflow. We've also incorporated advanced communication tools where users can chat with our customer support team at the order level. And we've also made it super easy to request revisions and track progress of your communications with vendors. All of that is tied to each order and product and loan, so you're able to see it in real time. Now, all of these features are built into FirstClose ONE to streamline the loan fulfillment and order tracking process. FirstClose ONE also includes that digital lending platform, which is the white labeled offering that creates an excellent experience in new client acquisitions and onboarding. So, your borrowers will love it, and then your marketing teams will love it as well because, they'll be able to market it, and the borrowers will really like the modern digital experience that's completely customizable to your lending institution. This will, again, allow you to compete against the most advanced, fintechs out there in the world. Our solution will also feature the automated ordering and the Smart Select reports that Joe had mentioned earlier. And the one-screen navigation is going to allow users to toggle through, the FirstClose proprietary report as well as each individual report through the one-screen navigation. So no opening other windows or dragging files to the desktop. It's all going to be in one place with a click of a button. If we go back to the home equity lending goals in the beginning, as well as the digital and automation strategy, to move forward that we discussed earlier, and, kind of in depth on how Joe went on where we're at and where we're going, you can see that FirstClose definitely delivers across the spectrum. You're going to enjoy an improved customer member experience. Your team is going to love the additional support from the customer success team. You'll be able to increase your loan volume, and you'll see a huge reduction in processing costs as well as loan processing times and closing times. And it will really allow you to optimize, your existing human resources and streamline compliance and security. So all of this is designed to give you a competitive edge over other lenders and allow you to compete with those fintechs. We just wanted to, quickly say thank you for your time today. I hope, that you were able to get some tools and some strategies, and you saw a couple things that maybe piqued your interest, and maybe you thought, what if we should do that? Does that fit into our digital strategy? What is our digital strategy? And, how can we move forward? Our contact info is listed here. We'd love to set up a strategy session with you, help bring those digital strategies to life, and we look forward to earning your business. I just wanted to take a moment to roll into a couple questions. One question I have, and I'm going to let Joe handle this one, is if we went with the automated ordering matrix, how fast can we change our configurations with your team if our lending matrix changes due to the current economy and what our max LTV lending is going to be?
Yeah, literally within minutes. That's how long it takes to build a new configuration. The tool on the back end is very easy. You probably wouldn't know how to do it all yourself, but we're going to give you the ability to do that if you want to manage them that way. Typically, we'll do that for you, and we can help you change a config right away. We know what happens is we see a few of our clients who have changed some of their LTV guidelines and maybe made it a little bit stricter as far as the risk management is concerned by raising the FICO scores. Adjusting your configs is very, very simple, very easy to do, and many times we can do it in real time for you and resave it. So our technology is designed to be easy to modify and implement, and we basically can do all that work for you. It doesn't cost you anything. So we're just trying to help you be more efficient that way, and we obviously know in this environment guidelines are changing, and that's a common request that we get. So that's a good question. Thanks for bringing that up. Any other questions?
Yeah, and just to piggyback on that question, is your team able to provide any strategy or best practices on the matrix if we think that maybe we need to make some adjustments as to what products we're ordering for which loan type scenarios?
Yeah, I think that's really the secret sauce with our organization. You know, I know service is really important and everything else, but I think also having the insight and the ability for your account manager to make some suggestions about how you could do it differently to maybe even save and optimize your strategies. When you look at it, the way that we've kind of put some of these matrices together for some of the other chief risk officers of the organizations we deal with today, it allows a way to develop a closer relationship with our clients and really gain the insight to how they can streamline their operation and to, you know, shave days off the turn times that they're trying to exceed so they can have that good review from the client. So those things are definitely happening, and I think a lot of our high volume banks really do appreciate the fact that our account management team and the dedicated support that we have is instantly right there, which you can watch and do it almost in real time together. And plus leveraging the BI tools, I mean, it's just really an optimal experience for our clients because they're going to want to make changes and they're going to want to have suggestions that they maybe have not thought of yet. And that really has opened up the door to share ideas about how to optimize it and where we've been very successful with other clients. We share the best practices and how that they can bring those experiences to life and even have the ability to test them before they even go live. So that's important too as well.
Thanks, Joe. And then one other question, and this is a landing question. You know, we're really interested in utilizing a hybrid closing option, but how do we go about that, and is that even an option if we are located in a mandatory attorney state?
That's a great question. So the answer to that question is it depends on the particular state and what the particular statute, but we use attorneys in the attorney states where it's necessary, and we use notaries where they can be combined or where the attorney is required. We have attorneys in our network as well that we use. So yeah, we do hybrids in both attorney and in non-attorney states.
Yeah, that's cool. Awesome.
Perfect. Well, thank you. Those were great questions. I'm going to throw it back to Jennifer. Thank you again for everyone who jumped on the line. We hope everyone enjoys the rest of their day. And if you have any questions, feel free to reach out to any one of us three.
Great. Thank you very much. We did record the session, and we'll make it available within 3 to 5 business days. You may access the recorded archive by using the same information you used to join today's live session. And feel free to share that recording link with your colleagues. On behalf of the Consumer Bankers Association, thanks to our speakers and, of course, all of today's participants. Have a wonderful day, and you may now disconnect.